My name is Jerry Slam, I'm a Chief Strategist at Tricio Investment Advisors, and for the week of 17th August 2026, we shed our spotlight on the SOX Index, Philadelphia Semiconductor Sector Index. You see the weekly chart in front of you, semi-log, with some key moving averages, 13 50 week, along with our proprietary trading model. Now, this index has been covered a lot by us over the last year, mostly because this is where all the action is, the AI sector and the demand for chips, which seems to be, everlasting. The higher chip prices go, the more demand there seems to be. This won't last forever, of course, despite what the industry seems to be telling us. So when we look at the SOX index, we always say the same thing. Yes, by all means, the technology and semiconductors should be part of a portfolio. Yes, it's done very, very well over the last year and over the last 5 years. But it's one of those things where you make sure that the holding weight is exactly what you want it to be. It should have actually gone up a lot in your portfolio. Chances are it's going to be a little bit higher than the allocated weight you thought you had. You may want to just take a look at it and make sure you're comfortable with that weight because we think there is a correction coming. On a chart, you can see what I'm talking about. The long-term blue channel shows where quote unquote it should be trading or it has been trading since the global financial crisis. Then the red channel shows a slightly steeper trend that we've seen since around 2015-ish, which again goes with that tech view that we've had that the last 10 years plus has been really, really good for US and to some extent global tech shares. And now we have the accelerated green channel, and the current chart price action of the SOX indexes were above both the red and the blue channel, and we were briefly above the green channel. Now, what does all this mean? This just means one thing. The price acceleration has gone up. In terms of momentum, it's great. But in terms of, wow, is this a bubble? We don't know. It's best to look at it in hindsight, obviously. But at the moment, we can say with some confidence it's trading at a steeper price momentum than it has in the past. And corrections shouldn't be a surprise. We're looking for a pullback to the 50-week moving average as a real potential before year end. That'd put it around 9,000. That's a significant correction from where we are now. The real risk, though, would be that if SOX index goes through a major correction, well, let's say people say, wow, there's a lot of chips coming down the line. Prices will probably fall again, which goes against the whole chipflation argument that some people are making. Then we could see a move back down to, let's say, the top of the long-term bull channel. That's a blue line that's currently pretty far away, around 7,500. So it's one of those things where we look at this and go, yep, there's room for correction. Nope, we're not bearish, but we are saying current levels, make sure you're holding what you think you're holding in terms of allocated weight. If you want further information on our research insights, please contact us at info@tricio-advisors.com. That's advisors with an O. And please ask us about our Ask a Buddy service, where we help clients manage risk and build resilient portfolios.